So, Buck, obviously, some of the things that are happening in the news today, and obviously having an opportunity to talk about current issues, that's one of the things that BFSI Tech Talks enjoys doing, discussing topics of relevancy. So, Cap One has been in the news today with regards to the fines that were assessed to them. Buck, would you like to give a little bit of detail around that and some of the reasons of why those fines were assessed to Capital One?
Sure, absolutely. I mean, it's very critical. And, one typical mistake that our members, many of our fintech members make is that, hey, this is some big bank stuff, Capital One, Citibank. I'm not going to be impacted by that. But I want to make sure that they understand that that is definitely not the case. See, what has happened, Wayne, is that, you know, Cap One, these big banks keep acquiring a lot of, financial services units and this and that. So they had acquired something way back in 2005 called, I think, North Atlantic, something. And it was doing certain transactions. It became a unit of Capital One over a period of time. And it was doing a lot of money remittance business, and their anti-money laundering, their OFAC checks, their know your customer processes were A, very weak, and B, what FinCENs claim were deliberately abused or not done from time to time to allow certain kinds of transactions that should not have been allowed. And also, they did not report to government about certain transactions. There are a couple of requirements financial institutions and service providers have. They have to file different reports with authorities when there are certain specific, red flags. They are called red flag reports basically. So one is like SAR, suspicious activity report. Other one is foreign currency transaction report, and so on. And FinCEN, the United States Treasury, has got this body called FinCEN, Financial Crimes Enforcement Network. A very powerful body. It has not been really using its powers extensively for a long time, but they seem to be getting into the act now. FinCEN, and I want all our startup members to understand FinCEN, US Treasury, what happened in case of Capital One right now. And the fine that has been made put on Capital One is $390 million one shot. So even for Capital One, it's not a small amount. But I don't want to speak about Capital One. They can pay 390 million. They can fight it in courts for another 10 years. They have got all the resources to do that. But the problem is for fintechs who may get involved in such kind of activities without even their knowing about it.
Good
That's
point,
what I
Buck.
would.
So, but can you kind of talk about that? Because really the scope would be how can fintechs, what do they need to be aware of so that they minimize their risk?
Mm-hmm. In fact, when you are working with many fintechs who are in different stages of their business journey. So they have created innovative financial products, whether in the payment space, whether in mutual funds, many parts of the banking and financial services industry. So almost everywhere in the financial services space today, anti-money laundering checks, know your customer, what is the background of your customer, who they are, who owns those customers' entities, where are their offices, what is their business, all that become absolutely essential.
Mhm.
And the third thing, so two things I covered: KYC, know your customer. Other one is AML, anti-money laundering. How do you know that the your customers are not using your organization or your business or your platform to launder money? And the third thing is called OFAC, Office of Foreign Assets Control. So it maintains a list of all the red flagged organizations and people all over the world. And if you are allowing your system to be used to make financial transactions where these people can either send or receive money, then you are in serious trouble. Now, why do I'll talk more, but this is the basic background that these three things I want to put in front of all our members all the time.
Yeah, and Buck, you consistently, this is a recurring theme. I think it's a great idea, but here's the challenge. In working with fintechs, so many of them are focused on their product. They're focused on getting their product in the marketplace. And as you know, many of the fintechs that we know in the ecosystem are bootstrapping. And so their goal is to get their product in the marketplace or partner with a bank that's going to help them further to augment their product capabilities and functionality. But many fintechs, CEOs and founders and co-founders don't necessarily think of all the risk and compliance that's going to be necessary to make their company sustainable. So in view of what we're talking about with recently with Cap One, and then just other inconsistencies and risk exposures, what advice do you give to fintechs so that they could be so minimize their risk and so they continue to be a sustainable entity, right? And not become a casualty because of situations like what we're talking about with Capital
In
One.
fact, I'll pick up the last word first, Win, because that word is the most important word that you used just now. They should not become the casualty of these things. Capital One, Citibank, sometimes mistakes will happen, but they have got the money and the resources to fight it out. If it comes to that, they can pay $390 million in one check and walk away, right? It doesn't really even dent their business. But what about a fintech? What about a startup? Any small bad news, any small fine of $1 million or anything, and they're just out of business.
Right.
So what I will say, Wayne, to answer your main question, which I keep saying all the time, is that your product is not what the bank is buying. The bank is buying the ability to put your product into their production system. And if your product cannot be put into their production system, then howsoever good your product is as your product, it is of no use to the bank. Does that make sense?
Yeah, absolutely.
Getting into bank production is a hard challenge, even for bank own applications or even applications from big established players like Pfizer or SAP or Microsoft, take anybody. Even those products don't get into banks production these days easily. Forget about a fintech or a startup. So for a fintech, don't think about your product as what you are selling. What you are selling has to be a package as to how that product will go into the production system of the bank. And for that, think about your ecosystem. And when in fact, you are working with a few of them that I know, that a lot of banks, financial institutions are now looking for help from innovative fintechs to reduce their onboarding cycles. Onboarding takes 2, 3, 4 weeks, and really banks can't afford that. That's a lot of effort, a lot of waste of money and time, and customers are unhappy. So using the modern tools, machine learning, artificial intelligence, and all other capabilities to accelerate the onboarding is something that the banks are looking for and willing to pay a fintech for. But the onboarding is exactly the space where these laws get broken, right? Because you're in a hurry to onboard a new customer. So you did not spend enough time on the due diligence, whether that customer was worth taking into the bank's application system or not. So think of your product as part of an ecosystem. And if right from the beginning, for example, we have got good companies, which are also startups and fintechs that, we work with, who are offering specialized solutions on AML KYC. And they can do it via APIs. They are offering it as SaaS, all kinds of things. So if you think you have got a product that fits into or that gets into the bank's onboarding process of a new customer, then tie up with people so that you are going to the bank offering an end-to-end solution rather than your product as a discrete part of that solution that the bank will have to then figure out how to use, because that they don't have time for.
No, Buck, these points are really good. And one of the things that we would look forward to with BFSITechTalks is to explore that with our webinars, our white papers, really communicating to the fintech ecosystem, the banking ecosystem. What are some of the specific things that are going to be needed? Because as we continue to see situations like this unfold, being ahead of the curve and helping fintechs to become capable and sustainable is a key aspect of what we're focusing on in our
community. And they're doing great work. In fact, I'll add one point to what you said, Wayne, just now. It is bad for anyone, even for Capital One and Citibanks of the world. $390 million is definitely not a small amount, but more than that, the reputation risk, the credibility risk, all those things are there. But imagine a fintech's name coming on FinCEN website saying that a fintech has been fined for not, having proper compliance. Just imagine the repercussions.
That's
And let us be very honest. You are part of a supply chain, and you are supplying to somebody who is 10,000 times bigger than you are. He is sitting there with 800 people, 1,000 people compliance department, and his primary goal will be to dump things on other people. Let us be honest about it. And if you are on that supply chain, and if you are the weak link, or if he can dump something on you to say that, hey, you are the weak link, then you are not going to be able to come out of it.
Yeah, no, that's really true. But in summary, these are some very practical, solid information that we're providing today to the fintech financial services ecosystem. Anything in conclusion that you wanted to mention to our audience?
Conclusion, like I said, think of your product as part of an ecosystem
Mhm.
of the bank's production. Don't think of your product as your product, because the bank cannot really, take 200 different products and have its own game going on to figure out which one goes where and how does it fit into the whole, jigsaw puzzle. You need to solve that jigsaw puzzle for the bank if you want the bank to move quickly and adopt what you are offering.
Excellent. Excellent. Thank you, Buck. Thank you that we were able to share this information.
Sure thing. Sure thing. Anytime. All right. You have a good one, Wayne.